Welcome, everybody, to another episode of the Good Deeds Note Investing Podcast. I am your co-host, Jamie Bateman, flying solo as a host today. Chris apparently has better things to do. I don't know. But fortunately, I am joined here by Wealth Without Wall Street, Joey Mure and Russ Morgan. How are you guys doing today?
Never better, my friend. Thanks for having us.
Yeah, good to see you again, man. It's been a while since we've talked last.
Absolutely. So for those who have not listened, Joey and Russ were on, what was it, probably a year ago now. I probably should check, but this is a repeat performance today. So we had the pleasure, and Chris graced us with his presence last time. Four of us were on, and we went through kind of Wealth Without Wall Street, as far as, what is that and what's your company, and we drilled down into the infinite banking concept quite a bit, and obviously Russ and Joey, your backgrounds and things like that, which we'll touch on briefly here, but I definitely recommend for the listeners to go back and check out that episode. That's going to give you a lot of background for this one. So before we dive into kind of what you're working on these days, why don't we just quickly touch on your background and infinite banking and how that plays into maybe some of your investments these days.
Well, I'll try to keep it brief, but I love being on a note podcast because my whole career was the mortgage business, and I spent 11 years in that space. Built a very good name for myself and good business, and subsequently realized that I was on a path of a higher income, but not necessarily financial freedom. And I looked around, and the things that were most important to me, my family, for instance, was getting the least amount of my time. And so the higher the income, the more the kind of the demand on my time. And, my wife actually has told me since then, whenever I told her I was going to leave that business to go into build Wealth Without Wall Street with Russ, she was immediately on board. And I thought it was weird. I was like, that's really strange that she was just like, hey, you give up $300,000 of income and just start from scratch. And she's okay with it when she's pregnant with our fourth daughter. And I asked her a couple of years ago, what was really going through your mind? And she said, honestly, Joey, if you'd told me you were going to be a garbage collector, I would have said you should do it, because it would have meant that I got more time with you, and I was just sick of you being gone and not present. And so anyways, long story, Russ and I joined forces in 2014 to start getting out the message of where to find financial freedom, like how to get there, what's the process to get there. And ultimately, it just is almost like documenting the path he walked me through and helping other people to see the same thing that's possible for them.
So I had to come along the way, basically, Jamie, and save him from a life where he was working 70 hours a week, enslaving people into mortgages and not giving them any pathway to financial freedom. And I introduced, you mentioned the concept infinite banking. I had recently been introduced to it as well. And pure nature, I had to share it with somebody. Joey was the most gullible person I could see that I could talk to about whole life insurance, which is kind of one of the backbones within that strategy. And I just, to my surprise, he was much more capable in explaining it than I was. So hence I asked him if he would come work with me so that we could partner up and become a lot more than just the two of us. We've built a team now that is teaching people how to create financial freedom through tools and infrastructure like infinite banking, like tax strategies, like understanding more about who we are as an investor, so that we can leave jobs and we can do the things that we're passionate about instead of trading time for money.
Yeah, that's awesome. I mean, full disclosure, I'm a client of yours, and I am a part of your community, and so I kind of do have somewhat of an inside look on what's going on. So I know one of the things you offer inside of your community is something related to establishing your investor DNA. Would you mind drilling down on that? What does that mean, investor DNA, and what does that mean for Wealth Without Wall Street and your community?
Well, I'll say this, that most people that you interview either on your show or we've interviewed on our show, they found a path to some sort of financial freedom through a certain vehicle, whether it be note investing, whether it be long-term rentals, turnkey rentals, short-term rentals, whatever the case may be, e-commerce. And so what do? They tell you, man, this is the way. You got to just get behind me and I'm going to show you the way to financial freedom, which is excellent. Like, you need mentors, you need guides along this journey. It's not something, if you go alone, you're not going to go very far. In fact, you're going to get chewed up and spit out more times than not. But what the reality is that most people start with the investment thinking that, oh, that's what creates financial freedom. But the reality is you create financial freedom based on who you are, how God created you with the certain strengths, the certain experiences, and the certain relationships and networks that you have. And if you don't start with yourself as the greatest investment, the path really doesn't matter. And so that's really where the investor DNA was born out of, is, man, you need to learn who you are as an investor so that you can get to financial freedom as fast as possible, and not be like Russ, who, went through college, changed his major about 16 times and ended up going on the 5th-year plan just to try to get that, that basic degree. I mean,
hey, dude, who doesn't like to stay in
that.
college longer,
yeah.
man? Come on.
Absolutely.
We call those people doctors, Russ. Okay.
Right. Nice. Yeah. So you have anything to add to that, Russ, as far as what the investor DNA means?
Well, I think what it helps people understand is that I don't have to try to look on a board of ideas and just blindly pick, because that's what happens, right? I mean, most of us have had a job at a company that offered a 401k, and we were stuck trying to determine which one of those mutual funds we should pick. And what did we do? We looked at the one that had the highest 1, 3, and 10-year returns. And we said, I'm going to choose that one. Right. And we talked to the person in the cubicle next to us, and he was like, that's the one I did last year too. Like, I mean, two blind people leading each other. Right.
Yeah. It's scary because it's really true. I mean,
and here, what's even scarier, Jamie? I was in the investment world for a long time. And I would ask advisors in our firm, which of the choices within this mutual fund deck, with some of the products that our clients were purchasing at that time, they were buying investments, they were buying products. And I would say, what are the funds that you tend to lean toward? And they just look and see the highest return, that one. And I'm like, are you like, and I was like, oh, cool. Makes sense. I look back on it now and I'm like, this is crazy. Like, the people leading people, right, and people that are in charge of others' money should not be, because one, they don't have money and they don't know what really to do with it. So yeah.
That's it. It reminds me of, I'm sorry, I was at the doctor last week, and and it's a new doctor of mine, and she said that if for my cholesterol, I can either go on this medication, or the other option is I can become a vegan. And my first question was, are you a vegan? She said no. So it's like, I'm not calling her a hypocrite, don't get me wrong, in case she listens to this, but it's like you should be following people who are actually doing what they're preaching, right? So sorry to cut you off.
100%. No. Well, my crazy analogy obviously derails me very quickly. I always get going down a rabbit hole. But the point of that is, if you listen to our podcast, you'll hear us talk about the many different things that we invest in. and I put the disclaimer, please don't go try to use all of those ideas.
Right.
Just because you see some that we're posting 10,000 a month, 20,000 a month, 30,000 a month, sometimes in cash flow in different businesses and investments that we're in, doesn't mean that fits you. And don't use the same model that you've used in the past with the 401k. The investor DNA allows people to narrow down the choices based upon who they are, the traits that they already possess, and how they can add value to something through that lens.
No, that makes a lot of sense. And I think, people who are inclined to be small business owners, or maybe more active investors, have a tendency toward action without thinking. So, actually that is, I listen to your podcast, and I know you guys have your hands in a lot of things on the passive side for sure. And so I'm curious how that's evolved for you guys personally over the years, meaning, I don't know how many different, I know you're in short-term rentals, land flipping, different, probably 8 or 10 other, I know, like Ethereum mining and
ATM
cattle
investing.
and ATM investing and
private notes,
private note fund. There's somebody
candle companies.
I did send out a payment to you yesterday, Joey. But anyway, I guess let me back up. Somebody from the outside who turns on your monthly cash flow podcast, your monthly income report, whatever you call it, which is blown up, by the way. I mean, I think you guys know that, but for the listeners out there, you should listen to that. You guys are making what, 50 to 70 grand a month or something in passive income. I mean, so, you're doing something right. But I guess the point I want to get to is it seems like from the outside, somebody who doesn't follow you guys, if someone doesn't follow you guys too closely, seems like you're all over the map. I'm just going to throw it out there. It seems like you've got your hands in everything. So how have you personally decided or determined your own investor DNA, and what your long-term strategy is?
Well, and to be clear, what the investor DNA is a profile. It's largely based on like a DISC profile personality test, but we've used that data to then match it up against how you see things from a financial world, right? How you view certain passive income strategies. And we have 6 on a matrix that you get along with that profile that talk about the pros, the cons, and the key factors that go into how you would view those investment types based on your profile. So just be clear, that's what we're talking about when we say the investor DNA. And just in my case, first of all, let me answer the big question is, how are you guys doing all these different things if you really have like a unique way that you, view these investments? And I would say the key to that is partnership, right?
Okay.
Russ and I are so very different, and we're very alike in a lot of ways, but there's certain key things about us that are very different. And so I am going to gravitate to certain investment types and strategies because they really provide stability. They provide consistency. They're not really, there's not a lot of variables and market conditions that are concerning. But Russ likes kind of this quick, fast, wants to be an influencer in certain things and be more involved from a marketing and strategy type deal. And so when we joined together, it actually opened up to where we probably would have never done certain things solo, which is a really cool part of this investor DNA kind of conversation is don't see it as a limitation, right? If you pull up that profile and you say, it says, oh, well, you really may not like this aspect of this business or this aspect of this business. Don't see it as, well, I can't be involved in that. It just means I need to potentially have a partner who is, and maybe I bring something else to the table in that case. So,
well, let me give a specific to that. So what is the thing, for instance, you said we're in a lot of different things, short-term rental business, for instance. So my dominant trait, what the assessment would say to me is that I don't like managing systems. I don't like managing people. I'm not very organized. Well, if you're a short-term rental operator, that's like the key factor that you need to have in order to be successful. Without that, you're going to fail miserably and really hack off a lot of people along the way. So to Joey's point, when we were going through this process, it was like, I like the scalability that comes along with short-term rentals. I like the part that it gives me people-oriented business that I can refer people to locally through different marketing channels. I like that aspect of it. So then it was like, okay, well, I like that. I'm passionate about this. I think it's a business on the move. We're in a shared economy already. Just makes sense. How can I get involved? So then it's looking for, well, who would possess those skills? And clearly Joey would suck at all of those things too. So it was like, all right, so I can't look to him to do this. How do we find an operator? Well, then the question comes back, well, if I'm going to pay someone to do all of that, I can't do it on one unit, right? How many unit then will it require for us to pay someone and that they would be happy doing it? And we would make money on our investment. So then it was like, okay, well, then that business intuition that Joey and I possess, the years of experience of managing money and looking at money and understanding finances and businesses gives us the acclimate to that thing that says, okay, I can overcome this con with a partner and an operator. Now let me use my gifts and my passions to apply.
That makes a lot of sense. So short-term rentals and land flipping, I know, are two big ones for you guys. Yeah, Joey, did you want to pick one of those to talk about?
I'm much more inclined to the land flipping side. And the reason is, if you think about it, land is probably one of the most boring asset classes of all time.
And you're boring.
Right? And I'm boring. Yeah, 100%.
All right.
Thank you.
End the podcast now. No, kidding.
But it's one of those things that is just, it's steady to me. Like I'm much more attracted to steady, consistent. That's the reason why I honestly wanted to work on the note fund, because it's just steady. It's not ridiculously, you're not going to see some drastic results one way or the other. It's just kind of, I can bank on this.
Right. It's pretty low risk and kind of boring.
Well, and if you think about it from a market variability or market volatility standpoint, they're not going anywhere, right? Land and mortgage notes, they're going to be here no matter what happens with COVID or, fill in the blank, what other like current events or market conditions. Land is going to be here. Mortgage is going to be here. So I'm really attracted to that. And also the fact that we could hire a team to run that business for us. It allows me to have more time freedom, which is my number one goal and objective.
Well, you like the fact that it's a relationship selling business too. Like you're helping people get rid of a piece of property that they bought because they loved it for some reason, but now they're no longer using it. And you like the aspect of connecting that person to someone who really would like it as well. And yes, it's systematic. It provides a very proven process when done repeatedly. And there's coaching available around that that people who are running it can be successful in it.
Yes,
100%.
So can you walk us through an example then of a land flipping deal? How does that work for maybe note investors who really don't know what you're talking about?
Yeah, I would say the beauty of note investing, having that background will probably excite you to this, right? I think that they're very similar in their nature. So a typical note deal looks like this. We will send out mailers to property owners, usually who own property in a state that they are not a resident in. So there's one indicator that says this person may be disinterested in owning this property. Another thing that we would look for, like low-hanging fruit, would be a property owner who's in a different state, who has back taxes on that
Sure.
property. Another reason why they may be disinterested. And so we will mail out, 100, 200, 300 mailers a week to these property owners and offer them money to take basically the property off their hands. And these are small pieces of property in general. Sometimes we'll get bigger piece of properties, but this isn't the type of thing that generally the person listening to this is going to be like, oh, this is where I want to go build my dream home on. No, this is like an acre in the middle of a desert somewhere on the side of a mountain or in the middle of a swamp. Like these are just places that people have bought for some reason or another, but someone else wants to buy too. And so what we do is we'll buy it. We've gone in there. It's an inefficient marketplace. So there's no real estate agent with like a sign on the property. Like there's not enough money in it for the real estate agent. So ultimately we go in and buy it. We figured out what the market is worth. We'll usually offer them about 25 cents on the dollar. And then we will turn around and immediately market it to the neighbors. First person to buy the property is going to be the neighbor. And when a neighbor passes on it, usually the spouse finds out later and tells them call you back, because I mean, because there's always that situation. It's like, why didn't you buy that property? Now they've built, 4 trailers on there and the guy's got a whole junkyard. Oh, wait, so that's just in my neighborhood. But
it may not be that the neighbor has plans for it, but they can now control the land.
Exactly. The next place is they're going to go on a Facebook marketplace and they're going to put it up there and they're going to offer it up as a low down payment and monthly payment for 4 to 6 years typically. So now they make it affordable to someone who may want to go park their RV and live on it. Right now, that's not an option until they own it, but that's really their vision is like, I want to get off the grid. I want to go there. I want to shoot rattlesnakes. I want to ride my 4-wheeler through the mud, whatever it may be. That's what they want it for, but they wouldn't normally buy property because they wouldn't be able to come up with 10 or 15 grand solid cash, but you offer it to them at $300 down and $200 a month for the next 60 months. They're like, I can do that at least for 4 or 5 months.
So can you you just started to, but put some numbers to it, walk us through a deal?
Yeah, typical deal. Let's just, for simplicity, we'll just say we buy a piece of property for $1,500 and then we go out and we market it for, $300 down and, $100 a month for 60 months. So typically we're trying to 4X from the very beginning. That's the total price in. And so when, we get out there, we're going to make somewhere between 300 to 1,000% gross margin off our deal. The typical person is going to buy it. They're going to set up a payment plan and they're going to hold it. Now we have what's called a land contract, Jamie, with these people, meaning that until they pay off the debt, they cannot occupy the property, meaning they can't put a structure on it or they can't live on it. They can go out there and hunt, fish, ride 4-wheelers, whatever the ordinances and jurisdiction would allow, but they can't live on it. But the beauty of it is that in the event that someone quits paying us, which we know in non-performing note world that happens, right? People stop performing. Well, what we get to do because of the rules that don't govern land, raw land, non-occupied land, is that we just cancel the contract. So now that person is no longer they're no longer paying it. We go back and remarket it. And this happens. We have about a 20% default rate out there. We would love everybody to see all the way to the end. We actually try our best to help those people, get back performing. But a lot of times for these type of people, this is the first thing to go. It's just a luxury that they can't afford and they can't pay anymore. So then if we can't work it out with them, then we will go back to the marketplace, which obviously now our cost basis has went down from $1,500, what we purchased it for, minus the $100 a month for 5 months and the $300 a month payment, a down payment they gave us. Our cost of capital and basis is way low, but we're going to still market it right back out at the same level.
Right.
Yeah. $300 down, $100 a month for 60 months. Yeah. And we just keep those notes going.
The land hasn't lost any value. Why would you market it any lower?
Exactly.
So that's pretty interesting. I mean, and so for our listeners, a lot of our listeners do buy land contracts. It depends on the state. It could be called a contract for deed. And typically speaking, a CFD, contract for deed, is the same thing as a land contract. Again, depends on, the situation, but Chris and I buy a lot of land contracts, but those are normally for owner occupied property. So it's a little bit different for sure. We still have to comply with Dodd-Frank and, certain rules that come along with dealing with a note or land contract on an owner occupied property. But that's interesting. Some of the differences between land notes and, owner occupied notes or land contracts. They're not living on the property. They're not, I guess I would say most likely the odds of working something out through the borrower are lower because they're not living on the property. They're not invested personally, emotionally into the property.
Right.
But like you alluded to, they have other property most likely, which is a good thing because this isn't their last, acre or, last dollar, if you will. So that's interesting. Have you now, if you I guess sell the land on terms and you have a performing note, have you guys sold any of those, or how does that work?
Have we done what now?
Sold any performing notes? Like how does that work? Like if you've bought land and then
We've bought
sold
some.
We have bought
Okay.
them. We have not sold them.
Okay. Interesting. That's and now do you still, because I think you had an active land flipping business and a passive one. Is that still true?
We enfolded the active one into a passive one.
Okay.
It was not performing in a way that was worth us continuing. So we just transitioned strictly to the passive model.
Okay. Got it. But that's still, in general, the land flipping is a strong part of your approach to all of this. Is that right?
Yeah, it's definitely a foundational part of it, in my opinion. It's a long-term thing. It's not a overnight,
Sure.
You're not going to see it like go crazy. But
Yeah.
I'll tell you, to the point of my daughters actually came to a Land Geek boot camp in August.
Okay.
And my 15-year-old has just purchased 2 lots in Texas and is now about to start marketing them. So she has gotten interested
So cool.
in the land flipping
That's really cool.
business. So that's pretty cool.
Yeah. I have to have my 14-year-old daughter listen to this. That's really cool. I know I was listening the other day, Russ, your 11-year-old is really into learning how to make money, right?
Oh my goodness. She is interested in anything money, like constantly asking me questions. She's learning from one of Joey's daughters who's selling rocks and seashells to people in the neighborhood. Like, how do I multiply that? Like there's the thing. It's like if we can pass down, and we need to, right? Pass down this knowledge to our children so that they would learn from us instead of having to go out and spend, tens of thousands of dollars to go to college, waste time in jobs that they end up hating, and then end up coming up and following what we've been doing. It's like, let's teach them as quickly as we can.
No, I really like that. I mean, that's your whole approach with I think it's kind of built into the infinite banking world in a way, the whole family legacy and family education and family unit from a financial education or wealth building pursuit standpoint. I really hadn't thought about it until talking to you guys, as far as the 401k is all individualized. It's all about me, or even a Roth or any kind of IRA. It's all an individual. That's what the I stands for, doesn't it? I think.
Yeah.
So yeah. Okay. So now how about the short-term rentals? Can you speak about those?
Well, from what standpoint? What we've done so far?
How does that fit into your whole business model?
Well, so the short-term rental space is interesting because you can approach it from either an ownership standpoint, like where you purchase a property and then you furnish it and then turn it into, place it on Airbnb, VRBO, or the like, and then make this much higher amount per month, because
Russ doesn't like that approach.
Do what? Yeah. Well, I mean, that's one way to do it. What we've chosen to do, because the market currently is so inflated, in our opinion, that we have approached existing landlords and just worked out a long-term lease with them, with the ability for us to, we'd call it a master lease, to be able to then turn around and market those properties on a short-term basis after we furnished them. And it's been extremely profitable because, we don't have to worry about what the market does with those properties. We're just able to make that arbitrage, the difference between what we pay monthly and what we gain. And as mentioned before, we have a full-time operator. So it is truly passive in the sense for us where we just check in with them once a week and just make sure, if there's anything that we need to help with on the marketing or influence side, we can help and we can, continue to grow the business, but it is actually being, run on its own. So what would you add to that, Russ?
So Ray Kroc is famous for saying to a group of Harvard grads after giving a commencement speech, I am not in the hamburger business.
Oh, right. Yeah.
What business was Ray Kroc in?
Real estate.
He was in the real estate business. Now, is there a hamburger business on top of that real estate?
Sure.
Absolutely. There is. And that's what the franchisee purchases. Ray Kroc was in the real estate business. So the reason I was disagreeing with my bearded friend a second ago is that the business is exactly the same.
And Ray Kroc is, we're talking about McDonald's, in case we didn't say that.
Yeah, Ray Kroc from McDonald's. Right.
Yeah.
So the STR business is a hospitality business. It is not a real estate business in any shape or form. That business is the same no matter if you own the real estate or don't own the real estate. You're ultimately running a hospitality business. In some situations, you're renting from a piece of real estate that you own. Sometimes you're renting it, as Joey was alluding to, from another owner, and people would call that arbitrage. Now, there is obviously a difference in the ease to get into the business. Not everybody, if you don't own the property, you have to get the property owner's approval for you to be able to use it for that purpose, right? But at the end of the day, the business is the same. And so we teach people that we have two different businesses that we're operating here, a real estate business and a hospitality business. In today's environment, we're not buying a ton of the real estate underneath it just because we feel like it's a little bit too expensive. Not that at some point in time, we won't buy it and potentially bolt on our hospitality business on top of it.
Yeah,
but for most of what we're doing, we're running a hospitality business, and it's a lot of fun because we have an operator. We get to throw our opinions in, and it's like, from what I hear from grandparents, it's like I get to hold them, kiss them, play with them, and as soon as they poop, I hand them to a parent. Like, that's kind of what I feel like with our STR business is that we get to have all the fun with it and all the excitement of it and come up with new ideas and then hand it to our operator. And we'll talk to you, next week.
Well, and also, like you said, you don't have a lot of money. I'm sure you have a lot of money into the business, but less than you would if you were buying every single piece of real estate. And so there's less risk there. And then you can also pivot more quickly if market conditions change, like you alluded to. If prices drop, you can start buying real estate. Or if for some reason, short-term rentals in this area they change the legislation, okay, you're out. It's not. It seems pretty liquid in that sense as far as your exit strategy.
Well, I would say that is definitely the thing that creates the biggest pause or concern for us as it relates to the SCR space. I think you got to be really cautious as to where you're going. Sometimes people are like, "Oh, I live in a city that's not really a tourist destination,
vacation destination,
and I don't think it's going to be a great spot." I'm actually saying, no, that is probably a better spot. I think we're going to see, at least in the short run, a lot of these, like the Miamis, the Hawaiis, the more destination the city is, I'm going to see those cities cracking down, because what's happening is all these hedge funds and these major investors are coming in and buying up all the real estate and making it unaffordable for the local people working in the hospitality industry, whether it's hotels or STRs or whatever it is, restaurants. They can't live there because you can't, if there's no long-term rental available, because it's all been bought and then turned into short-term rental. It's pushed the price way too high. And obviously they're not looking to come into Birmingham where we are. They're not going into these smaller market cities and even the outskirts of those cities to do that. They're going into those big areas where they know there's going to be consistent travel in those SCR businesses. So for us, like we definitely have started to think through, okay, the markets that we may want to expand in the future, we need to be cautious in knowing that we need to be in certain areas where maybe the government, if they did want to come down on it, they probably wouldn't target this spot.
Any idea what the numbers look like, from like what percentage of short-term rentals are vacation destinations? Put you on the spot.
No, that's a great question. I don't know the answer to that. I mean,
I don't know how you would even look that up.
Yeah, we've done a lot of research on Airbnb, and when and how it was founded and how much it's grown, and seeing that, it's gone. I think the last numbers I saw, it's like 180 billion-dollar business in industry. They have more nights rented than any hotel chain, in the world. But no, I don't know how much of it is vacation rental. My guess is, I mean, when you look, you type in Airbnb on the Google, it says vacation rental company. So they are deeming themselves as a vacation rental company, which is really interesting, because I think the purposes of what a lot of people is that it's not vacation. It's just another place to stay. This is sidebar, but it's the reason my brain works this way. My first job out of college was with a company called Enterprise Rent a Car. Now, when you hear rental car company, what do you think? When do you need a rental car?
Vacation,
right? Most of the time, we're traveling to another city. We fly in, we go get on that bus, we wait in the line, and we rent the car, right? Well, Enterprise Rent a Car, 90-something% of all the cars on the road have nothing to do with that. They're actually replacement. They're a replacement car. So they're actually renting the majority of their cars to people whose cars are in the shop because they're being serviced, or they've been in a car accident and being repaired.
So it's like a loaner.
Yeah, car. That's their niche, then my brain thinks like that. So when we're servicing customers and trying to determine who's our client for our units, I love trying to find the local person. Like, so we're purchasing a property right now, and that property is going to be an event venue, most likely for people having weddings inside the city, maybe having some outside guests, and they need a place to go to. And so I think that's a really unique feature for the city to have the people that are in there to have a place to go to. Now, a lot of our units, we've got people that have been displaced because of tornadoes, and their house was tore up, and they've been out of it for over 6 months, and they're living in our short-term rental, and their insurance company is writing our short-term rental company a $5,200 and $50 check every single month. And it's
you're okay with global warming, or I'm just kidding, but
obviously I'm thankful that nobody got hurt, and I'm thankful that they're a consistent renter, because right now, the month of December, the second week after Thanksgiving is one of the slowest weeks in our business cycle. So, but everybody who's there because of displacement, or their house wasn't ready, that they were getting ready to move into because they just moved into the city, or they sold their house and they're closing on the new house has gotten pushed back, they need a place to go. Those people are still there. They're going to be there next week until that happens. So it provides to me that replacement model, which really fits in line with my enterprise training.
I mean, it's almost like you have a long-term tenant at a short-term pricing, which is exactly what you want.
When you get a unit where you're paying $1,700 a month, and they're paying you $1,500 or $5,200 a month for 6 to 9 months, and you don't have to re-up the supplies. Obviously the margins keep rising every month that they're there, because we don't have all the new supplies that we would have to refresh every 2 to 3
or the cleanings or anything.
Yeah, that's true. And I know, like
the
traveling
expenses
nurses
and stuff like that. Yeah,
do you rent to traveling nurses exists. At all? Do you know?
Yeah.
Okay, gotcha. I know my brother rented to some traveling nurses, and that was great, because they got the stipend and everything was paid for, and then they were out 6 months later, and seems like that would be a good fit for your business model. But I know you guys have to run. I know you guys are busy, but I really do appreciate you guys coming on. What just real quickly before we hop off, what does kind of 2022 look like for Wealth Without Wall Street? Maybe not so much Russ and Joey's passive income, but the business Wealth Without Wall Street. How are things looking for next year for you guys?
Well, we continue to try to get better and better at helping people to find their path, right? To get the messaging as clear as possible, to build products and courses that aid you in that process, and then have our coaches continue to expand on what they can offer in terms of the inner circle and the other things that we do. One thing that we did add this year that I feel like is going to expand dramatically in 2022 is our top end mastermind is the passive income mastermind. Now, this is where 7, 8, 9 figure entrepreneurs are gathering together to learn basically how to expand their passive income, to reduce their tax liability, and to build the infrastructure it takes to really build a legacy and pass down this information to the next generation and beyond. And this is something, again, it's just in its early stages, but the amount of momentum and the people that have already been attracted to this is just really, it's confirmed to us that there was a need for it. And so really excited about that, and just continue to see where that leads. Russ, what would you say?
Well, I'm looking forward to more people who fire their bosses. I'm looking forward to more of those statements in the community where they said, today was my last day, but the first day is the rest of my life. And we've heard, yeah, we've heard 2 of those in the last day. And that's what jazzes us up. That's what just confirms everything that we do. And we work hard to do all of these things. It's ultimately to hear those statements, to see those results, to hear the stories of the spouses who've been able to come home, or the dads to be able to spend more time with the kids. That's what it's all about. And that's what we're going to continue to do in 2022, and find ways to make it where we hear those more frequently.
Yeah, well, I can say you guys have had a big impact on me personally. I mean, it's really enjoy being a member in your community, and just kind of following what you guys are doing. I love the fact that you work with people who want to take ownership of their situation. That's really what, for me, that's very appealing, as far as just, look, I mean, not everyone is going to really latch on to your message. But you can't control that. I mean, but you work with the people that actually want to take responsibility, take ownership of their own kind of destiny and their family's legacy and their legacy. And so and the other thing is, there's not only one way to do it, right? We've gone in depth on 2 different ways to create wealth and passive income here today, but you guys are personally involved in many more. And that's where the investor DNA comes in. So yeah, I think we're going to have you guys back for a 3rd time if we can make that happen.
We're good with that. We're always up for it. You guys are like-minded, and we really appreciate being able to come on. If I could, I would love to just drop this as like an action step, because to your point, if you're not the one taking action on your own financial future, who is? Like literally, there is nobody who is going to take action for you and give you any sort of result that is going to help you out of whatever it is you're facing. And so what we did is we built a course that you can start the process, and it's ultimately to find your goal, right? What if you could identify what financial freedom looked like for you, how much easier do all the steps after that become? And the problem is, most people never stop to dream because they're just caught up in the minutia of each day. They don't slow down. They just keep kind of going through this process.
Yeah.
And so
busyness can be a form of laziness, I think. I don't know I don't know where I read that, but it's easy. Mentally, it's a little bit easier sometimes to stay busy.
Busyness is such a poor word. And I mean, we've been talking this whole time about the investor DNA, and what Joey was alluding to is we built a course, a pathway for people to follow to be able to get access to it. So if you go to wealthwithoutwallstreet.com/passport, you're going to get access to that pathfinder, which is where the investor DNA lives. Now, you may not be ready for that. You just may want to take the first step, which is understanding, your vision and getting clear of what you would want to be, do, and have when you're financially free. But if you're like, hey, I want that investor DNA thing that they have, that I would like to know what that is for me so that I can fast track my time to success. We give you an option right there on that page. So I just, invite you into that. Joey, you said this, and I'm gonna disagree with you one more time as we finish.
Good.
This is nothing new to Jamie. He hears me disagree with Joey all the time on our podcast. But you said that if you don't do it, nobody else will. And I disagree with that, because there is a default mode. It will happen for you, regardless if you do it. It's the status quo. And my question and challenge is, how has that worked so far? Has that got you to where you want to be? And if it hasn't, then yes, now you're going to have to bootstrap this thing and move forward. And Jamie, I appreciate you letting us come on, beat up on each other. Thank you for throwing some jabs at Joey too. I love it. Like, sort of like tag teams, like old WWE kind of thing.
I think I got a couple more jabs in last time, or maybe when I was on your show. But so next time I'll have to get some more Joey jabs in. But you want to throw out any other contact information or anything like that, or just
that's the best place to do it, because once you sign up for those courses, you actually become a member of our community for free. And as you know, we're open to the fact of you can DM us directly. In fact, we'd love for you to tell us that you heard us on the Good Deeds podcast, so that we know exactly that Jamie's not just making up that he has a podcast, and that there's people actually listening.
I got to hit record. No, I'm kidding.
So we'd love for you to hit us up there. And that's where we spend most of our time.
Thank you so much, Joey and Russ. This has been awesome. You're an inspiration for everyone out there. And for all of our listeners, go out there and do some good deeds. Take care, everyone.